This video chart presentation at ESSX Rental Corp. It's a NASDAQ capital market stock trading our ticker ESSX. The daily chart happened to catch my eye, so I scrolled this back to a 2-year weekly chart because I think it paints a little bit better of a picture as to what's going on with this chart being in a channel. See, it's been relatively bearish for the last couple months, falling from the highs on the top part of the channel around 450, back down to the lower end of the channel around $3. I think this is a chart that can be played either way, so I want to take a quick run through it and discuss what I'm seeing. Of course, we always talk about MACD trending back towards zero. You can see it's coming off lows around $2, all the way up to more than double at 431. It's coming off a PPO ADX pinch. Overall, a very nice look, but the MACD is slipping off because of the downward pressure the stock's been taking on since the beginning of August. It's right at that make or break point because it's holding that support level. I want to see it hold right around that zero mark. So I think this is kind of an opportune time to pay attention to it and see if that MACD rotates or not and drops another bullish cross. ADX is down very low, almost reached 10. Starting to rise a little bit now. Remember, the ADX doesn't tell you which direction. It only tells you strength of direction. With that negative DI up on top where it is, it's presumable that this chart could fall down pretty hard and start to gather a lot of strength in a downward fashion. MFIs also show a stock going bearish. Longer term lines, the red and gold, 14 and 21. Couldn't break through 50. It's a sign that people are paying lower prices over the given periods. The accumulation distribution is holding pretty firm, even making slightly higher lows. That's actually kind of a positive sign. And the Chaikin money flow moving back towards zero tells me over the last 20 periods buying and selling pressure has been about equal. So his volume-based indicators are definitely giving a little bit of different reads, and that's why we take a look at them. CCI breaking through negative 100, that's a bearish sign. Again, has to do with overall pricing over 20 periods. Stock's trading well below its normal mean. Full stow shows there's little momentum in the play. Sitting underneath 20, that's considered oversold territory. And the tricks, it's a very slow-moving, triple exponentially smooth indicator, but it just dropped a bearish cross as well, and it's holding right around zero. So if this chart's going to try and turn back bullish, it's going to have to rotate pretty quickly and hold that mark, which means it's going to have to take on some upward pressure. RSIs, as we always talk about, when those longer terms break underneath 50, momentum's come out of the stock, and chances are it's going to drift lower, and of course that's exactly what happened through here. Now we look for that break back up through 50. So the indicators are indeed mixed, but leaning towards the bearish side of things. What I really see as important through here is a support level right there at $3. Now it has dipped below it as low as $2.91, but it tends not to want to close down at the lows. I think if that support falls, stock's going to fall almost 20% more down here to these old lows. That's the next real sign of support, and because it's breaking out of this channel it's been in, there's a good chance it might come back down and try and test new lows around $2. Now that will go along, of course, with the idea of the trend shift going back bearish, the fact that there's little momentum in the play, and the fact it broke through a key support level that's been holding for almost all of 2012. So that would be the downside. To the upside, definitely going to be resistance right around 450. Even going back historically, you can see that area was support. Now it's been serving as a definitive resistance point. It does represent a pretty nice upside. It's almost 50% from its closing price of $3.11 on Thursday. And if it does happen to break through that, I don't see more resistance coming back in play until ultimately up here around $6.50. Volume has picked up this week. Almost 700,000 shares traded. That's the best week it's had since June. And there's still Friday trading left, which unless something dramatic happens, I obviously don't think it's going to catch this one. But potentially volume could be higher than the second best day it's had this year in the first week of February. Overall, though, I thought this was just an interesting chart to share because of the channel it's been in for this year and the fact that it's sitting on that support level. I wanted to show the downside and the potential upside should the chart grow legs again off this support point. So we'll put this up on radar and see how it performs from here going forward. But as always, merely my interpretation of the ESSX rental chart. Thank you for watching and trade smart.